Happy Freight Friday! If you've made it this far, congratulations, you've come a long way. It's going to be a great weekend. We're going to give you a little bit of an overview. We brought our closers in today. Nick Austin is going to be telling us what to be looking out for. And Kyle Cunningham making his inaugural appearance. Going to be talking about volumes. What is happening with volumes? It is a very strange time. It's been a very strange week. He's going to be giving us his insights and analysis of what in the world is happening with that and bringing it closing down the week. Jesse Cohen talking about how are they in air? How are we getting ahead, if at all, of those tariffs that we've been talking about all week? So without further ado, let's start. Nick Austin, hey man.
Hey Chad.
You're like a kid in a candy store with all these new features.
Boy, I'm telling you, man, the road cams, road conditions, just critical events, all that stuff.
The freight train keeps rolling through the snow.
Well, it's not really rolling. I mean, look at all those trucks just sitting there, really. Now, this is just a still frame, but I've been looking at the picture. This is from just west of Truckee, California, out in the Sierra Nevada, and I've been looking off and on for the past couple of hours and throughout the day so far, and almost every shot has looked like this. So, especially during the morning hours. Not a lot of snow on the road. The road temperatures are not cold enough that the snow is sticking. The storm is kind of winding down. It's been there for a couple days now.
If they had tuned into FreightWaves Now and read your weather reports, maybe they could have circumnavigated.
Still, there's snow on the grass. But anyway, still going to be delays. Another snowstorm is going to be hitting the Sierra Nevada this weekend, probably starting Saturday afternoon. Now, if we go further west of Truckee, now that first shot we looked at was about 6,000 feet or so above sea level. Yeah. Where we're looking now, about 35 miles west of Truckee, 35 to 40 miles west, up at Castle Peak, this is at about 9,000 feet in elevation. A lot more snow on the grass, kind of slushy on the roads. Not as many trucks moving through this area, but there were earlier some trucks that were headed on this section of I-80. So this is Interstate 80 here, so it's pretty messy out there. And there'll be another storm coming this weekend. So drivers just need to be aware of that. There'll be probably chain controls up again this weekend as that storm starts to get underway. So we'll look at critical events too, because not only snow out west, but what do you think is going to happen in the plains this weekend?
I think we see a developing situation, severe weather, lots of orange blobs.
That's right.
What does that mean now for our critical feature?
Well, it means that these are the severe thunderstorm outlooks, where you see these orange and these big yellow kind of blobs here, we'll call them, just for lack of a better word.
Okay.
And the ones here in particular that are over East Texas, up into the Missouri and the Central Plains, those are for tomorrow, for Saturday, but there is also severe weather possible today further north of that. But as we head into the weekend, more severe weather possible in the plains. They had just been getting hammered out in the Great Plains states.
They can't catch a break.
This is probably the third or maybe fourth week in a row where certain states in the plains have had severe storms and tornadoes. Just not every day, but at least a few days each week for the past 3 or 4 weeks. So that's going to continue hitting right into the weekend. So parts of I-10, I-40, I-20, you name it. All those highways out in the plains from Texas all the way up to near the Midwest, just drivers have to be really careful.
Lots of rail disruption. Probably housing, probably gets in the way of housing.
Absolutely, because there's still a lot of flooded land up in parts of the Midwest, Nebraska, Iowa, Kansas, other states from the big storm back in mid-March, and it's just, they've had periods of off and on heavy rain ever since then. A lot of locations along the Missouri and Mississippi rivers are still above flood stage. They have been for more than a month. And so there's still a lot of flooding problems there, including some washed out rails, Union Pacific, BNSF Railroad. So yes, still some problems and disruptions with freight because of that.
Okay. Hey, don't blame Nick Austin. He is just calling it like he sees it. He's not making the weather. You know, the funny thing about weather is everyone talks about it, but no one seems to be able to do anything about it. Anyway, making his inaugural appearance, Kyle Cunningham. How you doing?
I'm doing awesome. I'm so happy to be here. It's a shining moment in my time at FreightWaves and beyond FreightWaves now. So what we want to talk about today is volume. And this volume is not turned up to 11. This volume has been turned way down. And so what you can see is as time has gone on from basically this time period here April 24th, there was a big shot up in volume over the entire USA, and we've come down here now and we can see that it's at that 93.77 on the basis points, those out of 10,000.
Kyle, so, this is a shocking development. For not only has it fallen off a cliff, but this is the very time pre-Memorial Day where we would be expecting to see it just surging.
You really would think so. And so what I believe is going on is the idea that so much freight came into the nation from overseas, from basically all around the world, East Coast, West Coast, doesn't matter. It pumped up, and essentially where we're at is there's no more warehousing space available. There's nowhere else to put the stuff. Let's check out the outbound volume here in Houston. If we can see last time that the volumes fell off for the nation, really Houston trailed down with it as well. And then it quickly picked up again in tandem with the national volume, made its way throughout the same essential volatility periods, took a little bit of a drop as the nation rose. But what we're seeing today is that as the entire US volumes as a whole fell off, Houston is a glimmer of hope in the volume sea. So now let's go ahead, let's take a look at the head haul map for that general region.
A glimmer of hope, I like that.
Isn't it great? And here's the thing, guys, when you're looking at the head haul map, you want to make sure you're placing yourself in the best optionality. So if we go down here to this Texas area, we can see this. And just a quick refresher, yes. Blue, outbound freight is greater than the inbound freight. Red, you're going to see a lack of outbound freight. So a lack of optionality if you're looking to leave that area. Austin, deep red. Lubbock, pink. Fort Worth, pretty pink. Not the best places to be if you're trying to move. Houston on a white here. So
which means balance.
It means balance. Don't get in the habit of thinking that I have to be just a blue zone. Blue is great, white's not bad, red, not exactly your best friend. So what you want to do is once you find a market that has a growing level of volume, is you want to then go in there and look at the outbound tender rejections and not just the whole composite, but you want to take that and break it down by length of haul. Let's go ahead and take a look at the outbound tender reject index. Chad, you want to go ahead and explain a little bit about what's going on here?
I'll let you do the explaining. Why don't you let us know what is going on with this pretty complicated looking chart? Is it as bad as it looks?
Now, complication, it's relative. If you walked up to this chart and had no idea what was going on, then you'd be pretty confused by all means.
We've got different lengths of haul. You want to tell us what they are?
So the mountain, the blue mountain in the background here, that's a composite of all these. But what we want to do is break them down. Now, we're not too interested in city hauls within Houston because most people are going to be wanting to go ahead and get on out of that area.
Right.
We've got the short haul rejects down here at 1.81. Now, a reminder, 10% on rejections, that's a balanced market in terms of power between the shipper side and the carrier side. So let's take a look. The tweener haul, those 450 to 800 mile runs. Not necessarily the runs people want to do all the time, but these are the ones that are going to provide you possibly the best rates. If we look at the mid hauls, and let's talk about tweeners. You're looking at Kansas City. You're looking at, what else? St. Louis. You got any other ideas around that area?
No, I don't. But it's looking like they're balanced, and that looks like where the action is, right?
Yeah. So that mid haul, you might want to be looking at something going from Houston to Oklahoma City, and then if you got to run way back home out west or way up to the northeast, long hauls at 3.7. Possibly a lower rate, but still, if the volume's out, you're going to be able to find something in that long haul.
I'm a little surprised that the short haul is as I guess everybody's just wanting to do that short haul. Maybe that's why they just take whatever they can get.
And that's a really good point. It is. It's a take what you can get, but it's also on those short hauls, you have so much freight that is going to be contracted. So the short hauls, unless there's a huge project going on or an idea of a lot of short haul volatility and volume rising, you're not going to see the short hauls have those spikes. But look right here. This is your answer. 10.64 on those tweener hauls. Kansas City, St. Louis, that's where you want to look.
I have a question.
Go ahead.
Why do you think, Kyle, why Houston? Why is it the glimmer of hope? Why are we not seeing this in Dallas or on either of our ports? If this is like what do you think it is about Houston in particular that the volumes are staying as high as they are?
I think with Houston being positioned in the essential middle of the country, and with the port capacity at the western ports of Long Beach, Los Angeles, and the port capacity in Elizabeth or Savannah, you might just see a more opportunity to take your freight via ship into the Houston market. And then there's probably a lot more warehousing capability as well, considering. And then now those warehouses are able to go ahead, whether it's fulfillment, whether it's dedicated shipping, they're now able to disperse that freight across the nation. So if you're nearby, watch the Houston market.
Watch that Houston market, bringing it. Nice job on your inaugural debut, Kyle Cunningham. And closing us down for the week, Jesse Cohen, bringing us some air cargo, talking about one of the most talked about stories all week, the tariff and trade war.
Absolutely.
Welcome.
Thanks very much, Chad. So wanted to review 3 slides with you today.
Okay.
Our first slide is a sonar chart. We've looked at this one before, but it covers the air cargo rates. The blue line is Hong Kong to North America, and the green line is Frankfurt to North America. And what I want to draw your focus to are these points over here on the very end, because this point for the Hong Kong North America was after that first week when we raised tariffs, as the US raised tariffs on Chinese goods from 10% to 25%. How did the market respond? On the air side, went up 9%. It's 5% higher than this time last year.
Okay.
So clearly we think the market is starting to react. There's an additional $300 billion that's in play for additional tariffs, and there could be some pull forward. Certainly the ocean rates would react, but the air rates look like they're starting to react. So we're going to keep a close eye on this.
Okay.
From a European standpoint, there's also quite a bit of tariff talk about automotive. Rate is euros 1.97.
Just a maybe slight tick up right now.
Slight tick up, but really kind of in range.
Okay.
It's lower than last year by about 6%. And the market is soft right now, so we're not expecting to see anything. The noise on the tariffs in Europe is not as loud as it is in China, so this will probably stay down for a while, but we're going to keep a close eye on the Hong Kong.
Well, so we've pulled up the top U.S. airports handling China cargo from 2018 through right now. Tell us about this chart, Jesse.
So what this chart shows are the top airports from Chicago through Seattle, the top 10 or 11 airports that handle China import cargo and China export cargo by air.
Oh, cool.
And what it shows, so the imports are in blue, the exports are in red. And the tan line is the percent of that airport's total international business, in and out, that's represented by China business. So you can see, first of all, Chicago, Los Angeles, New York, and Anchorage are the top 4 airports handling China cargo, but you can see 36% of what goes in and out of Chicago is China-driven business.
And this is air cargo, of course.
And this is air cargo.
Yeah.
Los Angeles, 36%, so there's a lot of vulnerability here. This is a lot of cargo. We're talking 25% of the inbound cargo into the United States. It's from China, about 14% going out. And what that means is with the potential for higher tariffs on all of the Chinese goods and the potential for Chinese retaliation, we have a lot of cargo that's in play, a lot of potential for less business across many, many airports. That affects airlines, it affects airports, it affects trucking companies, it affects freight forwarders, it affects cargo handlers. So this is a major area that could significantly impact depending on what happens with all the U.S.-China talks.
It sure represents a lot for the Anchorage market, doesn't it?
Certainly represents a lot for the Anchorage market, but even for other airports in the Midwest, 37% is quite a bit. So and along the same lines, we've taken a look at the automobile imports and parts imports into the United States. Now this particular issue this week got a 6-month reprieve. A decision on tariffs will not be happening until October at the earliest. But this is one that affects our major trading partners such as Germany, Japan, Italy, and the UK. So again, looking at the top airports that handle automotive equipment and automotive parts, we see Chicago again, number 1, Atlanta, Los Angeles, and New York. And you can see the red line is the percent of the traffic that is automotive coming in that airport handles. So again, we have over 10% in the top 3 airports of the United States are comprised of automotive products. And we're not talking about automobiles coming in so much, although there is a flow. About 1% of the automobiles coming in are flown by air. It's really the parts. It's about 7.5% of the parts. That's really the big business for air.
Okay.
But what I wanted to draw your attention to, there's 3 airports that really support the automotive industry quite heavily. Obviously Detroit, Greenville, Spartanburg in South Carolina, and Huntsville in Alabama. These airports have considerable exposure to whatever decision is made in Washington, whatever is negotiated in terms of the, the European and the Japanese automotive imports. Over 25% in all 3 cases. So these airports are very much at risk in the event we get into a tariff situation with Europeans.
Okay, we have a developing situation. We're going to be keeping an eye on it. Thank you, Jesse. Fantastic stuff, closing us down for the week. And, thanks for closing down the week with us as well. We come to you live each and every business day at 4 o'clock. It has been a volatile, wild week. We have been seeing all kinds of strange, unexpected things, but you know what? We're not making these things up. We're following the data. We're letting the data tell us and informing us about what is happening. And then we're, of course, trying to interpret that data and get that out and help you be able to make your best market playbook each and every business day. Thanks for tuning in. Share the love. Subscribe on the YouTube channel here, please. And in the meantime, don't worry. Be happy.